Polygon has just secured a big win with their new partnership, and could Ethereum have a $1 trillion opportunity? This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. According to economist Lynn Alden, Bitcoin still risks considerable danger in 2023 as macroeconomic conditions dictate price action. Optimism is increasing throughout crypto as Bitcoin broadly retains levels which are 40% higher than at the start of the year. What the rest of the year may hold, however, is still a topic of debate, and Alden suggests that it's naive to assume that the good times will continue unchecked. The reason, she says, lies with the United States lawmakers and the Federal Reserve, and said, "I expect the Bitcoin bottom to be a process. Bitcoin prices are heavily tied to liquidity conditions, and liquidity conditions have been improving since Q4 2022. The FTX and Alameda collapse pulled down the industry in the second half of Q4, and now it seems like Bitcoin is playing a bit of a catch-up and getting back to where it would have been without the FTX Alameda collapse occurring. The Fed is currently conducting quantitative tightening, removing liquidity from the economy to fight inflation after several years of mass liquidity injections, which began in March 2020. Liquidity conditions are good right now in part because the US Treasury is drawing down its cash balance to avoid going over the debt ceiling, and this pushes liquidity into the financial system. So the Treasury has been offsetting some of the QT that the Federal Reserve is doing. Once the debt ceiling issue gets resolved, the Treasury will be refilling its cash account, which pulls liquidity out of the system. And at that point, both the Treasury and the Fed will be sucking liquidity out of the system, and that would create a vulnerable time for risk assets in general, including Bitcoin. In the long term, however, Alden is confident that Bitcoin will recover from its recent lows for good, saying, "I do think this is a deep value accumulation zone for Bitcoin with a 3 to 5 year view. But traders should be aware of this liquidity risk in the second half of this year." A United States appeal court is set to hear the oral arguments relating to the Grayscale investment lawsuit against the Securities and Exchange Commission over its decision to deny Grayscale's Bitcoin Spot Exchange Traded Fund, or ETF. According to a court motion filed on January 23rd, both sides will present their arguments at the District of Columbia Court of Appeals on March 7th. Grayscale initiated its lawsuit against the SEC in June after the regulator rejected its application to convert its $12 billion Grayscale Bitcoin Trust into a spot-based ETF. Earlier this month, Grayscale filed a reply brief with the DC Court of Appeals claiming the SEC acted arbitrarily in treating spot-traded ETFs differently from future-traded products, and that the SEC exceeded its authority when it denied Grayscale's application for a Bitcoin ETF. Grayscale CEO Michael Sonnenschein said it's important to remind the role that regulators like the SEC play when it comes to investors. They're not here to tell investors what to or not to invest in. They're here to ensure that all the proper disclosures are made so investors are aware of all the risks associated.
And actually, the approval of a spot Bitcoin ETF doesn't require new legislation being passed. In fact, it fits into existing regulatory frameworks. And I think as we're meeting with both houses yesterday and today, what we're really hearing from folks is that a lot of them share in the belief that had the SEC already approved a spot Bitcoin ETF, allowed GBTC to convert to an ETF already, that a lot of the recent investor harm we've seen in crypto would have been prevented.
What do you guys think? If the SEC had already approved a Bitcoin ETF, would the harm from FTX and other crypto collapses be much less than it was? Ethereum users are one step closer to accessing the $26 billion worth of Ether staked with the world's largest smart contract network. On Monday, Ethereum's core developers announced the successful deployment of the first mainnet shadow fork, designed to test the readiness of the ETH stake and withdrawal capability, a feature expected to launch by March. Mainnet shadow forks are a dress rehearsal for system upgrades, which allow developers to test for design flaws and tweak any outstanding issues. Monday's test previewed Ethereum's upcoming and much anticipated Shanghai upgrade, which will introduce staked ETH withdrawals to the Ethereum ecosystem. The timeline has been a top priority for the network's core developers, who are eager to deliver the ETH withdrawal capability as quickly as possible, even at the expense of other improvements. Sassel on Twitter wrote, "Ethereum staking is a big industry, but it's going to get so much bigger than anyone can imagine. Solo staking, centralized and decentralized liquid staking derivatives, institutional stakers, restaking, LSDs as DeFi collateral, and more will lead to Ethereum staking becoming a $1 trillion industry." David Hoffman responds with, "The bull case for ETH staking is no longer that Ethereum will be the settlement layer for the internet. That is now the base case. The new bull case for ETH is that it's the security layer for the entire internet. ETH staking goes from one-dimensional to omni-dimensional." Do you guys think Ethereum staking will become a $1 trillion industry? Cardano-based stablecoin DJED is on track to launch next week as confirmed by Coty Network and MinSwapDex on Twitter yesterday. The highly anticipated DJED stablecoin has been jointly developed by Cardano IOG and Coty. DJED will be backed by other tokens and requires more than 400% in collateral value to be posted before it's issued to a user. This over-collateralization mechanism would allow DJED's value to hold stably during market stress and prevent a repeat of Terra USD, the infamous stablecoin running on Luna, which fell over 99% last May. Coty said, "We started the chain index syncing process. This process may take 14 days, and we started the syncing a week ago. We expect it to complete next week and be ready to launch. As of right now, this is the only technical bottleneck holding up the launch." DJED is expected to go live on over 40 Cardano-based decentralized finance applications at launch. Developers have simultaneously developed DJED Pay, a payments application that uses DJED that would allow users to transfer the tokens to merchants and businesses. Coty developers said in a Tuesday post that holders of Shen, a reserve token meant to support DJED's stability, would receive extra rewards when holders of Cardano's ADA cryptocurrency stake their coins to mint DJED stablecoins. Digital Currency Group is facing more legal issues as its subsidiary Genesis Capital got slapped with a new class action lawsuit. A group of Genesis's creditors filed a securities class action lawsuit against DCG and its founder Barry Silbert, alleging violations of the federal security laws. The lawsuit was filed by Connecticut-based law firm SGT on behalf of individuals and entities who entered into the digital assets lending agreements with Genesis. The law firm is known for handling major industry lawsuits, including a class action suit filed against Coinbase back in March 2022. The lawsuit alleges that Genesis committed securities fraud through a scheme to defraud potential and existing digital asset lenders by making false and misleading statements. According to plaintiffs, Genesis intentionally misrepresented the financial condition of Genesis, violating Section 10B of the United States Securities Exchange Act. This news comes as Genesis is going through its first bankruptcy hearings on January 23rd after the firm filed for bankruptcy on January 19th. Bitcoin Cash advocate Roger Ver has been sued by a unit of crypto lending firm Genesis over unsettled crypto options amounting to $20.8 million. GGC International, a part of the bankrupt crypto lender, filed the suit against Ver in the New York State Supreme Court on January 23rd, claiming that Ver failed to settle crypto option transactions that expired back on December 30th. Ver was given a total of 20 days to answer the summons, and should he fail to answer within the time frame, he would be obliged to pay the total amount by default. Fractal, the platform for game-related NFTs developed by Twitch co-founder Justin Kan, is expanding into the Polygon network to boost accessibility. The platform launched on the Solana blockchain back in December 2021 and raised $35 million in a seed round, backed by Andreessen Horowitz, Solana Labs, Animoca, Coinbase Ventures, and others. It now hosts dozens of Web3 games, NFTs, and tournaments on its site and offers a suite of developer tools to help onboard new creators. In addition, Polygon Ventures will be making an unspecified strategic investment in Fractal to help expand its services. 30 of Polygon's top games will work with Fractal on a campaign of tournaments and activations to lead up to the Game Developer Conference in March. Rob Chan, co-founder of Fractal, said, "Inspired by Justin's learnings from founding Twitch, Fractal's mission has been to relentlessly support Web3 game developers with everything they need to build the future of gaming, from user acquisition to blockchain tooling to financial infrastructure. We put the framework in place so they can focus on successful game development." Sandeep, co-founder of Polygon, said Fractal has emerged as a crucial hub for the discovery of blockchain games. By teaming up with Fractal and combining their impressive suite of developer tools with our own, we aim to make 2023 the year to bring Web3 gaming to the mass market. Bankrupt crypto lending firm Celsius may issue its own token to repay creditors, according to a January 24th report from Bloomberg. According to the report, a Celsius attorney told the court that the firm is negotiating with its creditors on how to relaunch the platform and adequately pay them back. The new relaunched version will be a publicly traded company that is properly licensed, which would provide more money to creditors than simply liquidating the company. If approved by the creditors and the court, the reorganized company would issue a new token to creditors as part of a payout plan. The report stated that the details of the plan would be filed with the court later this week. Users may be able to withdraw up to $7,500 worth of claims or 95% of the total, whichever amount is smaller. The new token will be issued to cover the remaining 5% or amounts above $7,500. What do you guys think? Will Celsius be able to issue a new token and get people's money back? That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.